The crypto market is facing one of its most dramatic moments of the year, and the shockwaves are being felt across the financial world. Bitcoin, dropping below $90,000 for the first time in 7 months, has become the symbol of a deeper, more widespread shift in market sentiment. Investors who only weeks ago were celebrating record highs above $126,000 are now confronting a fast-changing environment where confidence is evaporating and risk appetite is collapsing. The broader crypto market has lost an astonishing $1.2 trillion in value in just over a month, according to reports from the Financial Times, making this one of the sharpest shakeouts since the previous crypto winter. As traders reassess their positions, the mood has turned into what many analysts call a full-scale risk-off retreat. What triggered this sudden reversal? Verified reports make one thing clear. Uncertainty around U.S. monetary policy is at the heart of the crypto downturn. Markets were expecting clearer signals about future interest rate cuts, but instead, investors received mixed guidance from policymakers. That hesitation was enough to push traders out of high-risk assets like crypto. Reuters noted that even a slight shift in expectations about the timing of rate changes was enough to pull liquidity out of speculative sectors. And as liquidity dried up, the selling accelerated. This is also happening during a moment of weakness in the tech sector, where concerns about inflated valuations, especially among AI-driven companies, have intensified. When tech stocks weaken, crypto often follows, and this time is no different. Another powerful force behind the decline is the unwinding of leverage. Analysts say the market is still feeling the effects of the massive liquidation events in early October, referred to as the 10-10 wipeout. During that event, billions of dollars in leverage positions were liquidated across exchanges, and although the market temporarily recovered, the long-term effects are now visible. As highly leveraged traders continue to be squeezed out, forced selling is pushing prices even lower. The Financial Times highlighted that this extended deleveraging cycle is one of the main reasons Bitcoin has been so volatile in recent weeks. Institutional players haven't escaped the downturn either. Reuters reports that publicly listed crypto companies, from miners to treasury holders, are facing significant pressure. Large firms such as Riot Platforms, Marathon Digital, and Coinbase have all seen their market values decline alongside crypto prices. As these companies reduce their exposure or hedge their risks, the selling pressure increases. This creates a feedback loop. Falling prices hurt corporate balance sheets, which leads to more selling, which pushes the market down even further. Altcoins are suffering an even harder blow. Multiple verified reports confirm that Ethereum, Solana, and XRP have all dropped sharply, with Ethereum down nearly 40% from its earlier highs. European financial outlets reporting on global market sentiment note that investors are pulling money fastest from the most speculative assets, meaning altcoins with weaker liquidity are seeing the steepest declines. This is another sign that the market is prioritizing stability over risk-taking, and that the fear in the market is widespread rather than isolated to Bitcoin alone. However, not every indicator points toward a long-term collapse. CoinDesk reports that several on-chain metrics traditionally used to identify potential market bottoms are now approaching historically significant levels. One of the most notable is Bitcoin's net unrealized profit or loss ratio, which has fallen to points that previously aligned with recovery phases. Additionally, while retail investors are exiting in fear, some institutional buyers appear to be gradually accumulating positions. Not enough to reverse the drop, but enough to signal that large players still have long-term conviction. Even so, analysts caution that volatility is far from over. The crypto fear and greed index is showing extreme fear, and technical analysts warn that if Bitcoin fails to hold its current support levels, the next potential downside target could be near $75,000. With global markets shaky and investor sentiment fragile, crypto is standing at a crossroads. One path leads to a deeper correction, and the other toward a slow, data-driven recovery supported by institutional buying and improving fundamentals. For now, the message from every verified report is the same. The crypto market is undergoing a major reset. Whether it becomes a brief correction or a prolonged downturn will depend on the next wave of macroeconomic signals, investor reactions, and the stability of global risk markets in the weeks to come.